Well, here we're looking at the Dow Jones Industrial. This is a very concerning, as I've been stating here with the overall market. You could see that it tried to rally back and really break over this 18,000 level. We knew that that was going to be a very big, order for it to really do. And we've seen this two pivot ranges. We've talked about that the 17,950 level. We talked about that being very significant. Well, you could see it really come into play today as prices just could not sustain the rally. Comes right back to the 50-day moving average. Did break a little bit there, but close above the 50-day moving average now. That's all well and good. It's above the 50-day moving average, but not the fact that it really could not sustain the rally here. We're starting to see this kind of a wedge pattern here, and a lot of times these wedge patterns start to break down and break away here, especially when you haven't been seeing momentum to reciprocate. We haven't been seeing that momentum. We've been seeing divergence in the swings here, and now we see weakness and a failed swing, in my opinion, just yet. So, to me, I think we're really, really due for correction action in this overall market. So, I think people need to really brace themselves for that potential possibility, and make sure that you're protected overall here. This is one that I think is got a lot of potential to go a lot further to the downside. If you look right here, we could see the significant divergence here on this as prices go higher here. This is really not good. We do have a lot of prior ranges near the 17,000, so that's going to be a really kind of an area where it's going to be extremely important it holds that. We start to see that break and violate that. I think that'll be a real indication that we're going really much lower. I've been talking about for quite some time about this 15-year cycle and the very dramatic thing that could be happening here. It's very, very crucial that people pay attention because we could really start to see this start to break down very dramatically here. And we've been seeing this have a very, very nice run, but I think, and I've been saying for quite some time that I thought 18,000 was going to be a very, very tough range to break. I think we start to see this come down into, even further than the 16,000. I think we start to see this come down to 14 to say 13,000 and maybe even much further down the downs later on. But that would be my initial call. Keep in mind, though, that we've had prior highs around this 14 to 15,000. So that would be my first initial, there's going to be support along the way. First 17,000, then this 16,000. We know we see the prior swing there. Okay. Then we had a prior high near 15,000 and actually around 14,750 around there. So I'd be watching that also. But I think the longer term, we could really start to see this start to extend much further. So please be careful with your portfolio and plan accordingly because this could be a very brutal quarter in the overall markets.